Gold has been down almost 25% since its peak, which was in February almost. So one thing is important here is that there are certain kind of attachments in terms of headlines around the gold, and people are saying that it's the good thing about it is that the central banks are still buying it. The bad thing is the war that actually led it to decline massively. And there's also something which is extremely important, which is the interest rate scenario. That the Fed is gonna hike up the rates and gonna depress the valuations eventually. So the P stocks actually clinging it in the middle of nowhere, and nobody's very well understood of what it's gonna be in the near future, what the gold price is going to become at the end of the, let's say, 2026. So I must say that all of these uh, events and these developments are material on its own. They are very important, but actually the way they are being presented, isolated from each other, it is a problem, and nobody's getting a clear direction of what is happening. If I talk about myself, I'm not saying that I got a clear direction. Nobody knows the future, but at least we can understand what is kind of happening right now, and how the things are gonna unfold in the near term. So let's get started. Before I tell you about some trade ideas and a lot of other stuff that I have in my mind, I'm going to talk about some historical context, and it's about the central bank's history with a quote. And the central banks will not always be the net buyers of the gold, and it's very important to know that it's kind of a generation before 2010 when the central banks were the net sellers actually. And it was almost 3 decades or 4 decades, and the central banks were selling gold, and massive amounts of gold was being dumped. But since the start of 2010, they become the net buyers, and in the 2022, the annual purchases actually was the largest against the year 1971's. So this is not a new behavior, the way the headlines are presenting it. And if we understand that the continuation of this trend is going to stay here, yeah, this is a kind of a true environment right now. How the other things that are affecting this materially, and is this demand enough to give you a reason to be holding on the boat? It is the real question here. According to the World Gold Council, and they are saying that almost 45% of the central banks are actually, they just have it, actually are very poised to add the gold into their reserves. This is a kind of a good thing, okay? But some are just saying that they are going to just hold, and some are saying that they are, the one only actually said that it is going to sell the gold in 2026. But this is not all. Actual actions showed that there was divergence between the optimism to it, and central banks were actually bought gold before, not at the same levels that they were predicted. So this is a real gap kind of, and this is telling us that how much we should believe these headlines, because there are some sellers and buyers, and they are trading with each other. Like if the supply of the gold is going to be available by a central bank, the other central bank is going to buy it. Just like the Russia actually sold gold, the Turkey sold actually almost 10% of their holdings last year. So there are some central banks in between, in their own league, that are actually divergent to this trend. And one thing which is going to be most important than all of this is that how they are actually playing for it. Like what are the mechanisms that the central banks are using to pay for the price of gold buying. This is a thing that actually leads me to two different directions. Some central banks are actually saying that they are going to buy locally produced gold, and they are just limiting the export supply, and that how they are going to buy, they are going to mint the new currency. And that's a thing that may actually leave you on the question that isn't that gonna increase the money supply? Yeah, it is, but not a bit much if we consider the whole money supply growth in different economies in the world. So the second way they are going to buy the gold is selling their own reserve assets. The majority of the reserve assets is the US treasuries. That's something actually going to affect the treasury market also, and not on a greater scale, because if I say that almost 4,000 to 5,000 of the yearly supply of the gold, and if they are going to buy the gold, and the recent gold which bought in 2025 was almost 850 tons by the central banks, and they are actually buying the roughly 15% of the supply of the gold. So that's something actually not affecting the market of the gold in real terms. And if the central banks, 38% of the central banks, according to a World Gold Council report, are saying to buy it from selling the treasuries, that is something else, and that is not actually really affect the treasury market on the broader scale, and also that is not going to affect the price of the gold on the broader scale, because the buying pressure is very tiny as compared to other retail and institutional demand. I'm gonna get on the supply side later on, but there is something you need to understand first, which is uh, even though the central banks are actively buying the gold, and almost 74% of the central banks surveyed by the World Gold Council actually said that they are seeing their dollar reserves to be declined in the next 5 years. So they are just not stopping there. They are actually believing and planning to buy it on in the long run. So what is making the gold to go downward, regardless of the central bank's buying pressure? It is the war. Actually, we all know that, and it is something that is making a price retracement from the January highs and February highs. So the war is something which is making the investors and institutions a bit more concerned about the gold price, and the central banks are buying it regarding of the whatever the gold price is right now. They are insensible to that kind of thing. So regarding the safe haven asset concerns among news reporting, there is something which I can say is that gold has not actually left room in terms of the reserve asset or a safe haven asset. It's actually the people that are scared of the war outcomes, and yeah, the real weights are actually playing here, and the Fed pressure, which is going to be in the terms of the hiking the interest rates. So that is going to depress the valuations, and investors are very concerned about that part also. So they are lowering their the exposure to the gold, and because of the volatility it actually experienced before the war, and that kind of a bull run actually got reversed also, and that part of the story actually also playing it here in terms of the retracement from the January and February highs. So this is not a something isolated which is happening. The war is not something isolated which is doing the work to the gold price. It's also the bull run that gold price actually experienced before the war. So they're talking about the retracement from the February highs. Real rates are the player here in the backdrop also, because the real weights actually you can say that when the March drop actually happened, which was a very massive drop in the price of the gold, It was the real rates in terms of the money market funds and the treasury bills. The people were parking their money to these assets and was totally shifting away from all of the kind of assets, for whether they are equities, whether they are commodities, whether they are the bonds, 2 year or 5 year bonds. They are actually shifting towards the kind of the most safest assets which are going to give the yields, as the yields were high because of the war premium. The 3 month or 6 months treasury bills were actually playing the part there. So this actually led to the price of the gold to decline, because people were not actually having the kind of confidence in the gold as a safe haven at that time, and also because of the bull run that it just got experienced before the war, that reverse actually led to the decline of the price, and that was just kind of a double shot. Not believing it as a safe haven asset, and also the reversing of the bull run. So the price actually got dropped massively from its highs. So now talking about the supply of the gold. So as I said, there are almost 5,000 tons of the gold in the supply back in 2025, and out of that 3,600 tons were because of the newer mine production kind of. So this is very important, that because the mine production of the gold has not been in the growth, very much growth since the past decade. It's almost 1% and per year, and it is projected to plateau and not keep climbing up, because the top tier mines which actually produce gold and the newer discoveries actually take a lot of time and almost take decades to build up. And if the gold production and supply in the market needs to be come structurally higher, then we have to wait past 2030 almost, in the shorter time span. As I'm considering right now that a newer production of the gold will not catch up to the demand of the gold in the near term, because there are some reserves actually got discovered in Pakistan that is actually very optimistic for the gold supply, but not on a higher level, to just give the enough supply in the market that gold prices will stay stagnant or cut on the downward pressure. It is not going to happen. And considering the central bank buying at a higher levels, the kind of the reserves that are additionally available till 2030, that is going to be eaten up by the central bank demand, and that is actually going to put a floor on the price of the gold at a higher level over the longer term. And also the recycling science is also not supporting the opposite of it, because the recycling was only 3% in 2025, and people are and investors are actually holding onto the gold because the gold price is so high, because they are in the optimism that the gold will go high and high, so they are not selling it. And that is something actually putting the gold off the market. The overall take from this discussion can be like this: the central banks are actually on the trend to buy the gold, and it's been on the run since 2010s, and the supply will not be meaningfully available till 2030s. And because of the war and all that, the gold is kind of structurally in the downward pressure, and it is not something to do with the motives of the central banks also. And one thing which is very risky here in all of this is the real rates. If they are going to push higher, meaningfully higher from here, then you can see that that is going to actually depress the valuations of the gold. But that is not something maybe actually happening in the near term, or maybe one hike in the 2026, because that is also going to concern the Federal Reserve and the economy of the United States in terms of their tax pressures. So that is something else going on in the parallel. So I can say that it is holding the equities of the low cost miners. Because the low cost miners may don't have much of the debt on their balance sheets, so they are actually not much exposed to the finance costs. And also the all-in sustaining cost, which is a measure of measuring the cost of the mining, which includes the capex, royalty costs, and all of that. And this measure is not going to be much in an environment of depressed gold price valuations, because this index or measure actually contains volatility costs, which are directly linked to the price of the gold. If the price of the gold is high, the revenue of the from selling the mining and selling the gold is high, then these royalty costs actually going to be higher also. So if the gold price is going to get depressed, these royalty costs will also going to go depressed, which is going to leave the margin kind of stable in a depressed valuation environment. So this is a kind of a very not very good thing, but this is kind of hedge a little bit to the structural trade that is being a bull on the gold price over the longer term. So this is all I have for you today, and I hope you got something valuable out of this. And if you got something valuable out of this, then kindly subscribe to my channel and share this video with someone who may need to know about this all.